Welcome to Trading Lounge. There's a public holiday in Australia, so I'm not going to do the indice report on each country, but in this video I'm going to cover the S&P 500, the DAX, and the ASX 200. Okay, with the S&P 500 here, we were looking for a turn, as you know, from a little 5-wave sequence up through to here. That turn is confirmed, and now we're looking for 5 waves down. It's the 61.8 is the bottom of the rectangle, the 50% above that. It's possible for it to pull down this far, but let's just count the waves as we go. That would be a more accurate way of doing it at this stage. So with that turn in mind, and also looking for a move down to the previous lows here, or perhaps even the 2000 here on the 4-hour chart here, we were looking at this top area somewhat like this. Now, there's a couple of things I need to point out here. Always nice to know at what point we would be wrong and so on. So the move down here is starting to work as an impulse wave, as it is on the European markets and so forth. This little area here within group 2 here, the 65 and 72 zone here, is the 50 and 60% retracement level of this previous low here to this high here. It's important because we do have an impulse wave here, 5-wave structure here. So if it moves past that 61.8% and moves lower through here, then that would confirm that we're actually, getting 5 waves down here. So this area here would be a really nice target area. So we could say the 2072 here is the target area that you'd be looking for if you're shorting this stage. So just moving in here a little bit on and working into this trend here, looking at it like this here in terms of completing the first 5-wave structure to the downside here, and then we're looking for an ABC correction here. Now just go to the 15-minute chart here. With the 15-minute chart, this top area through here, we've got a very clear 5-wave structure down here for wave 1, and then back for wave 2 here. And then we've got 1 and 2 and 3 and 4 and 5 here for the 3rd wave, the 4th wave here, and then the 5th wave here. It does appear that the 5th wave is not finished unless we count that little one in here as the 5th wave. So I'm a little bit unsure about that on the close here on the futures market. So there could be, following this little dotted line down, one more little low to come in place. But what we're looking for this market is a retest just above the 2100 here. This is the 61, 50, 60% area here from this current low here. So we're looking at some sort of corrective move here before we see a move down further from here. Okay, so there is also too on the cash market, there's a gap in this area here, and the cash market does lay out a nicer 5 waves down. If I can just bring the cash market over here, this is a 15-minute chart over 10 days, so in between these lines here is a day. So you can see from the high here we've got a nice 5 waves down for 1 and 2, nice strong 3rd wave as we would expect. 4th wave here, we've got 1 and 2 and 3 here. I was looking for 4th here, but 4th is already sort of overlapped the bottom of wave 1 here. So I'm in a little space here that I'm not quite sure about, but there could be one more low coming into this place here. Now this market will try and cover this gap up here. It failed to cover it up here, but it's just something that it's more so on the futures market than the cash market anyway, but we're just aware that those two are sitting here for a later date here. But as it goes, the market will be moving down further as such. And I'm not going to go into the other indices at this stage. I'm going to go straight over to the DAX here, just so that we've got covered, a little bit covered for everybody, because now that triggers have been, setups have been triggered, and we need to sort of know where we are a little bit. So with the DAX in the bigger picture here on the daily chart, we're looking for a move down to 9.5 here. Now obviously that's a 61.8% mark that we've always had here for the A, the B and the C here, and we're looking, obviously there's going to be support where it closed here with these other lows here, so you can expect that 9,800 to see some sort of corrective vibration there before fading lower at that stage. So on the, let's just move in here on the 4-hour chart here. So slightly different sort of count here than the S&P 500, and that's fine. So we're looking at basically wave 1, wave 2, wave 3. I'm sure it's going to grip onto this 9.8 here, the first minor level below the major trading level here. You know, may even, depending on the strength of it, it may even, you know, try to retest that 10,000 as well. But the main point is that across the 9.8, expect some sort of correction before we see any further downside. So that means that you're going to need to keep the stops sort of well out of the way and just allow the market to do its thing. So just drilling in here a little bit further. There's different ways to count this down here, and I'll go over that in a minute in the 15-minute chart. But I've just taken this high and these two highs here, dropped this down here. So this is probably where we're looking really realistically at the 9.9 sort of area here. There are two different ways to count this down through to here. So on the 15-minute chart here, we're looking at it. I just want to go over two counts really here. First of all, it's possible to count this down as 1 and 2 and wave 3 here, wave 4 here, and then a drop for wave 5. So if that's the case, after 5 waves down, we look for an ABC pattern coming back to the 50-60% mark. So it could move up to this point here. That's possible. But I've counted this in such a way that I feel like it's still unfolding, and that would be wave 1 to here, wave 2 to here, and the wave 3 down here is still here. I mean, it's still unfolding to this point here with 5 waves in it, 1 and 2 and 3. 38.2 retracement level for this blue wave 4, and then down for wave 5 here, then an ABC, you know, that basic dance across the 9.8 before fading lower there to give us basically, I don't think I've got that drawn in, there we go. So wave 3 here, and wave 4 can retest 9.8 again as well. It'd be looking for a 38.2 retracement level, so if we take that down from here, it's possible for it to move back to this point, to the wave 4 of 1 lesser degree, before making a new low coming into this space here. Yeah, so we just need to work through that. I'll give this a little bit more thought here. Yeah, so, and the Australian market, the ASX 200, you know that I've been looking at this in more of a bearish count. Now, I could be wrong here, and this market could be the same as the S&P 500 and the DAX and so on moving up. The FTSE's got the same sort of bearish pattern here. And what I mean by that, this particular move through here being in 3 waves, it didn't take the high out here, but on the FTSE it did something slightly different. So I've got the bearish count for the FTSE. So even though the FTSE made a new high here, I've always treated it as a wave B here and looking for a larger 5 waves down, because basically the move up here, this is 5, 1, 2, 3, 4, 5 here, and wave B here. And then here you can count it as 1 and 2, and 1, 2, 3, 4, 5 for the third, the fourth, and the fifth. So if we don't get 5 waves up here, we just get 3 waves up here. So, and then this move down here is very much like Australia, where we've got 1, 2, 3, 4, and 5 here. So it can be counted as an A wave here on the daily chart here. You start to see the 5 wave sequence here much better. The 1 and 2 and the 3 and the 4 to here. 5 waves here for 5, and ABC coming back to the 50-60% area, the 65, the medium level here, as we would expect, and then a move down from there. So there's a very bearish picture here for the FTSE at least, and the main point here is that we've got 5 waves down here. So we're going to get 5 waves in this area here. There's a bigger bearish picture here to possibly unfold, and that's in line with the Australian market. So basically, I'm either wrong with the FTSE and the Australian market and right with the S&P 500 and the DAX, or I'm wrong with the S&P 500 and the DAX, and I'm right with these markets. So I think it's always good to have your eyes wide open, and you know, you need to trade what you see at the end of the day. And what we need to be at the end of the day in these markets is currently short. You need to have short positions in, and you need to really be thinking about, you know, as I mentioned all through last week, whatever, about, you know, protecting any long equity trades that you have in the market. So perhaps use the weekly robo or something of that particular nature to keep you in on this trend in case these do pass their, you know, their 61. Because if they pass this 61.8% mark here, then it's going to be really too late to get in, because we're going to be in a series of 4s and 5s then. But, you know, currently we're in short in these, you know, in these areas, and we need to build on that in the right way. So anyway, we'll keep that in mind. So on the Australian, I'm going to keep talking about the bearish thing too, you know, over the time ahead. So the Australian market here too is different from the FTSE and the Australian market, you know, I've got a very strong relationship in terms of patterns, and even though we didn't take the high out here, we did in some of the banking sector, but this is the banking sector really in the US too. It's like this, so it could also be in a bearish pattern. You know, it did exactly this. So in this case here, we've always held this as the A wave, the B wave in 3 here, then down for 1 and back for 2 here, so 3, 4, and 5. So we certainly could be on this pathway here as well, but we would need our banks to show us the way down, and they're basically getting there. So this is the ASX 200, so it's a possible 5 waves down here, and an ABC here for wave 2 here, and yeah, so let's just see how this goes. So there's a couple of things here. The 60 from this low here to this high here, the 61.8% mark is on the 5,100, this trend line here. So it's possible for this market to come to here and then go off there again. That's possible, and we'll work that when we get there. But what we have been interested in is that we could see that the market moving up here was very tired and rolling over. So we were just, you know, looking for triggers to put us on the short side, which occurred, you know, on the Friday and whatnot. So now we need to work out what's actually going on in this space here. And I don't have an answer for that yet, but I certainly know the intraday count here. Will this be breached here and so on here? This is what we need to know, because otherwise we'll be looking down here further, and this is the time to take action, and we've been doing that. So we're doing all the right things here. Just drilling in on the 4-hour chart here, and just to point out that this is the 50-60% retracement area down here, and you know, obviously this market here has already moved down here for this first wave, so it's really leading the S&P 500. It's more in line with the currencies, the Australian dollar and the euro, and we're short on those as well, as you know. So this particular turn here now, you know, we need to be mindful that we just don't get an A wave, a B wave, and a C wave coming to somewhere like this here, and then moving up from that point. So this is what we need to work through here. We need to get some confirmation that we're on the right track. It is moving down rather swiftly here. So it's showing the personality of a third wave, not so much, because normally in a correction, I've mentioned before, you get the first leg down as the A wave. That's normally the sharpest, and then you get your B wave and your C waves on more of an angle. But when we see this one here starting to come down like this, which it is, then we start to think, well, you know, that's you know, we need to start thinking of wave A, so to speak, you know, of wave 3, so to speak. Anyway, moving in on the 2-hour chart here, this is how we're basically looking at it at this stage. So yeah, so this first move down is wave 1, or an alternative A wave, wave 2, or wave B here, and we got that high in here. We were figuring that it would move down from this particular high here, but we're mindful that if it made a new high here, then we would have to be on the long side, but that didn't happen. So basically we're on the short side here, in a few different places, and may have been short from the top here as well. Not where it matters now though is what this is working out to be down here. So I think there's more downside to be had here. So in a nutshell, expect to bounce off the 5.2 area here. Now there will also be supports between 5.3 and 5.2 here as well, and that's what we'll explore now. But as you can see here, we're looking down into this box here, but there are degrees of support, and the biggest one is 5.2, and then of course we're moving into to all the sub levels in here. So on the 15-minute chart here, so it can be as bumpy as this. Okay, so we had a stop up here at 53.97. You can move the stop down to 53.43 or 47. Doesn't really matter too much. We can get a breach above the 5.3 here. Probably a little bit unlikely at this stage, but yeah. So this little move down through here, I may have this wrong here, but I was looking at this as wave 1, which we never had a problem with. Wave 2 here, as we understood before, and then this gets a little bit ugly, but we have to look at this as wave 1 here, wave 2. This sharp one is wave 3 here. Maybe wave 4 to here, then 1 and 2 and 3 and 4 and 5. So we can have the third wave in here. Fourth wave could pull back to the 52.80 area, and then down for wave 3 here, then a wave 4, then down for wave 5, then a larger wave 4. So basically we're in the structures of the wave 4s and 5s here. So it can get a bit choppy. So we're just going to leave the stop well out of the way, unless you want a really tight stop and, obviously track it down, lower through here. Now, in terms of the sub levels here, the market's dancing with the midpoint here, the 50. So basically we've got 1, 2, and 3 as group 1, 50, the midpoint, and then group 2. So group 1, the center, and group 2 here. So the market is working with the midpoint here at the moment. Whoops a daisy. Just getting these things to work. I'm a bit rough and ready, but I like to get things as close as possible. So anyway, yeah, so we're bouncing off the 50 here. So the group 2 is going to be the resistance area here. So if you're going to be shorting from some sort of short covering here going on, then it would be in group 2 here, especially that number there. This number here, 72 is important, as you know, but when you get 772 or 272, they're going to play a much stronger role. Now, this won't become apparent until this starts to unwind across here, and it's a number that we can really work as a resistance point, and a point to to add to positions and so on these bounces if you're going to be trading through that. Anyway, this is the picture. So yeah, I'm not going to go into the banks and all that today, but we'll do that tomorrow. Alrighty, cheers.